And after yesterday's nice gains, the market opened stronger again today, but it's since drifted into the red, and it seems there's still some uncertainty out there, Yolanda.
Yes, Stephen, the market seems quite spooked by the bad news, obviously, from Goldman's, and not really, having concrete resolution to that. We've seen the markets breaking through new highs in the last week. So there's a lot of concern that share prices are fully priced, and that possibly we could see a correction, and that there is more risk to the downside than there is to the upside.
Of course, just on those Goldman Sachs numbers we had out yesterday, much better than expected, yet the market really looking past the numbers coming out of Goldman Sachs and focusing rather on this fraud scare. Of course, we do know that the Financial Services Authority in the UK also plans to investigate Goldman Sachs for fraud, and at the same time the Securities and Exchange Commission in the United States potentially looking at 19 other banks. So this does have implications for the banking sector, doesn't it?
Yes, Stephen. I think the market is really spooked in terms of what they're going to find. In terms of the derivative market, where we've seen a lot of risk, and really, highlighting the issues that have really brought the markets where, down to 2008 levels, that potentially that we're not seeing consumer demand coming through, and that we're seeing that the demand that's really driving is inventory based. And we've seen that with good manufacturing numbers coming out. So investors taking profits where they can, and then just looking for direction for the market, but really ignoring all those fabulous earnings numbers that have come out, where most companies in terms of numbers, we've seen that 80% of the companies reported have actually beaten earning analyst forecasts. So investors looking for direction.
And of course, this was similar to the last quarterly reporting season, where we also had about 80% of companies beating forecasts. Of course, that was due to cost cutting. The market now really focused on revenue growth among those companies as well. And in many of the cases, that also appears to be coming through, doesn't it, Yolanda?
Yes, Stephen, it has. If you look at Goldman's, you look at Citibank's, they've all, especially with Citibank, they've come out and they've seen that they've reduced bad debt, loans coming down. So we're seeing that stabilizing, which is quite encouraging for the US, for their consumers, but it's not an indication of how much they're going to grow into the next, into 2010. So very good numbers, earnings higher, but markets looking for more, looking for direction in terms of, are we going to climb higher or are we going to correct?
And of course, we've also seen some economic numbers coming out. We had UK jobs data, and they appear to be quite positive. At the same time, we have that meeting beginning with Greece and the EU and the IMF over funding. And we do know, of course, that Greece has to come up with 10 billion euros of funding by the end of next May. But some momentum starting to build on that front as well. So there's positive news coming from outside of the corporate sector as well.
Yes, Stephen, we have bottomed out. We've seen all this positive data. We see the jobs data better, but we need to see the consumer coming through, and we haven't quite seen that yet. We were surprised, however, by the CPI data that came out yesterday out of the UK, off higher Brent spot prices and higher costs, but still consumers still not there, but hopefully the market is pricing in that we're going to see a bit of a rebound, and that's really what's keeping us from breaking through those strong support levels. So if we do get a negative level, we could see us break through properly through 26 down, and that could take us another 2,000 points on the JTOPI.
Of course, consumer really not coming through for Pick n Pay if you look at those results that were released this morning. Revenue growth seemed reasonable and net profit seemed reasonable, but headline earnings per share up only 1.1%. We've seen that stock reacting negatively, down by about 1.5% as we head into the afternoon here. So not really impressive numbers from Pick n Pay, and not quite what the market was looking for if you look at what we saw coming out of ShopRite and Spar just a couple of months ago.
I know, Stephen, and Pick n Pay has been under pressure. We see consumers' demand being low. They've made some structural changes with their Score franchise. as well as there seems to be losing a bit of market share. We've seen Woolies coming out with a new brand, and Woolies is doing something very different there, and it looks like they're losing market share. Not a bad result, but they're going to need to do something to really carry through and support their earnings for the rest of the year. We believe that they fully priced, and that they are going to come back. We have a target price of 37 Rand, which is at least 7 Rand away from where they currently are. But the food retail sector is probably overpriced at the moment.
Well, and looking at food groups, we had Astral Foods also out with a trading update this morning. Headline earnings up 15 to 20% for the 6 months to March. It says the improvement mainly due to improved operating profit, reduced finance costs. What did you make of that trading update, Yolanda?
The results look fair, Stephen. I think they're focused at low entry business, your baby chickens. So I think they've done really well. They've cut costs back. They look like they've, really cleaning house. So hopefully they'll have a good year. A fair set of results there, Stephen.
Yolanda, we have to leave it there. Thanks very much for your insights this afternoon.